Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstocks.com, drstoxx.com, and we've been in business every market day since October of 2002, publishing the award-winning trend trade letter that we've done every day for 23 something years now, and it is in my opinion, it's a very good service for people that like to trade the marquee names, the blue chip names, the big important tech stock names, the mags, and others that are related to those. And you can go to the subscribe menu, scroll down, click on stock pick advisories. You'll see the trend trade letter, the exchange traded letter, the ETF trend letter, and the momentum letter, which is our most profitable service of all, there on that page. Now, I'm coming to you today live from the options room. I have two live Discord rooms where I share the trades that I'm making throughout the day. Option trades in the options room, stocks and ETFs in the trading room. And you can add on either one of those. If you buy the first one at the regular price, I can add on the second one at a 40% discount. All right, so I don't have a whole lot of time today, and I want to take some chart requests at the end of this, but this is, let's just take a quick look at the indexes. Now, we did this 2 days ago from the live trading room, and there's not really a whole lot more to say. We are still in a pretty tightly bound trading range for the S&P 500. And that's also true for the NASDAQ, but it's a broader range, or I should say a wider range. And the NASDAQ has been a bit weaker than the S&P 500. How do I know that? Well, look at where the price is relative to the 50-period moving average. In the NASDAQ, we're underneath it by a bit after today's reversal. And in the S&P 500, we're pretty much, as tight as this range is, we're pretty much right at the 50-period moving average and a little bit on the upper half of the range, whereas the NASDAQ is more in the lower half of the range. So the big news out last night was that NVIDIA blew it away in every category. They just did great on the bottom line, top line, forward guidance, and comments during the conference call. It was about as good as it can get, but the market was a little bit lukewarm, shall we say. It opened up pretty close to where it closed the previous day after a lot of overnight movement, upsetting as many call and put option players as possible. And that's just like the market to do something like that. That's why I don't play earnings anymore. For one, if you get close to earnings, the premium jacks up, so you're going to be overspending for those calls and puts. And secondly, because of that reason, you really need a big move. And I don't know, they're just not seeing a lot of real big moves these days. There are a few. In any case, so the NASDAQ is weak. The semiconductors are weak. NVIDIA itself, where is NVIDIA right now? Because I haven't checked it for a while. It is down almost 5% after a really, really good run. And I have been saying that 185 is a good level of support for price under the pullback, and it hit 184.58, dipped a little bit below, and now it's 186. So if it doesn't hold that, it may not. 180 is a good level. So anywhere between 180 and 185 is a pretty good place to get on board some NVIDIA if you like buying the dips. However, I do think that you're going to get a much better return and lower risk with your money in other spaces. So let's look at those here in just a minute. For one, the NASDAQ, I would just say, is off limits for the next week or two as the market sorts out a bunch of things, not just NVIDIA, but also the whole forward predictive nature of the growth of AI, CapEx spending, the energy demands for data centers, competition coming in for different AI platforms. It's kind of a mess. That whole thing that everybody got so hyped about, hyper scaled about, is now coming under a lot of pressure, and there's just a lot of uncertainty. There's unclarity. The market doesn't like that, and so I don't think that the blue chip tech stocks or the mags that are involved in that to the biggest degree, I don't think they're going to do all that well, and the NASDAQ is influenced by those. If they're not doing well, NASDAQ won't do well, and I think you're just going to see a lot of chop. I've been kind of thinking March was going to be a big pullback month, maybe 5, 7, 8%. I'm not so sure that's going to happen. I think we're just going to see more of this trading range, more of the same going out into April, early April. So we are due a little bit of a bounce into early March, and then I think we'll get the pullback. down here to the support level again, maybe the 200, and then toward the end of the month we get a little bit more of a rise. But look, we trade day to day. We're not going to be positioning ourselves based on that, and you can't really position yourself on a trading range anyway. On a trading range, the art of the trading range is that you buy support and you sell resistance, and we're right in the middle of it. So what can you do? Pretty much the same story for the S&P. The only problem I have with that scenario is that this is a very narrow range, and the longer you build a base inside of a narrow range, the bigger the breakout is going to be, and it could go to the upside. That's the likely path, but it could also go to the downside. And if we do get a break down below support in March, I think it could get a little bit uglier for the S&P, but I really don't see that. I don't see any of that happening. What I do see is more of the same. Trading range, bounce, bounce, bounce. All right, so I would just think about something other than the indexes and think about something other than the mags, and let's put our focus where the money is going. Where's the money going? Well, I'll tell you one place it's not going, and that is Bitcoin. Yeah, Bitcoin is still a big no-go zone for me, and in fact, I think you could probably make some decent bank on the short side over the next few weeks. So I got bearish on Bitcoin a little bit later than some guys in my pro trading group got bearish. They were bearish back in September, October, when they started to see a sequence of lower highs like that one right there. I got bearish on that big red bar right there when it broke through all that support level, got below the 200. I've been bearish ever since. I got a little bit bullish right in here because it looked to me like it was starting to hold the bottom and create a bit of a breakout move to the upside. And then I was totally disappointed and totally embarrassed because I said on Twitter and stock tweets, oh, I think maybe the pullback in Bitcoin is done, right? Maybe it's a buy. Not that I was buying, but I just throwing it out there. And then it just was a flash crash all the way down. Hit my target, original target back here in November was 75K. It hit that a little bit later than I thought, but still hit it. And it just kept on going down. Now we've got this little double bottom down here. It looks, yesterday was a big green stick, but volume was very light. And I was looking at call flow. I was looking at what the people in my pro trading group were doing, and looking at, just general volume on an intraday basis, and it just wasn't there. There wasn't any real interest. I think this is just more a lack of selling than a bunch of buying. And today's inside bearish day bar is probably showing us the direction of the next move. Anyway, it's really not that great of a trade. It's not that great of a setup. I think I would just leave it aside for now. Same is true with Ether. I have a $1,500 target for Ether. And we got all the way down to 1720 a few days ago. And it's doing the same little thing. We had the big green bar yesterday on low volume, and now a reversal pivot off the top of that bar. Doesn't mean it's going to keep going down, but it's not a bullish setup either. So let it go. Where is the money flowing? Well, I think gold's going to cool off for a little bit, but it's got a very good future going forward. I think if you're long gold, I would hold it. This is the thing about silver. So with the caveat that I haven't been trading it all that well since that big red stick right there. We got a really nice run, got into silver early. We kept going in and out and, pairing off and raising stops. And it just was a beautiful trade for us. We made a lot of money back in November, December. And then we had this big flash crash here in January. And I haven't been trading silver well since then. So I'm and I'm short silver right now. I'm short as of last night, but I'm not what shall we say? It's not a strong conviction trade either way. So I would just wait. I'm short silver because it did hit a series of range highs last night, started to pair off. I just got on board my trading platform and shorted a bunch of SLV, and we put on some puts in the live trading room this morning or yesterday. I can't forget. Anyway, and so now we've got an inside day bar at the top of an uptrend, and that usually spells a break, a ceiling. And anyway, we'll see where it goes from there. So I wouldn't put money into silver. I would hold gold. But where is the money flowing? Well, it's flowing into several places. Let's take a look at energy. Look at the energy momentum run. This is the kind of thing you want to see, right? Now, it could be topping out here, but I don't think so. I think this is just a little pause. We're still seeing some very good inflows here. We're seeing very good call flow in the energy names. If you drill down to like XOM, we're in some PSX calls. What are some of the other ones? CVX, OKE is a fun one to trade because it has a high beta ratio, and it's just doing a little nice little high tight base or a bull flag right up here at the top after a strong. Now, when you get that kind of upside momentum, unless it's something like silver, which can be a manipulated market, you usually see another leg higher after this because everybody's getting into the trade, and then they see that it's paused, and you're going to get the weekends getting out. You're going to get some shorts piling on, and that only adds fuel to the fire for the next leg higher. All right, so we like energy. I think Staples has a good run. It's been a little bit sluggish the last couple of days, but it's doing the same thing energy is doing. Look at this momentum run in the Staples sector. Now, that's interesting, right? Because if the economy is rip-roaring hot and growth is the big name, and blue chip tech is the big space, you're not going to see stocks like Walmart and Costco and Procter and Gamble and Philip Morris do skyrocketing momentum moves like this with all kinds of inflows, right? Look at that inflow. Those are big green sticks, and a lot of them, and that's what we're looking for. We're looking for the sectors that are getting this kind of juice, right? So XLP is a good space, and you can drill down into those names that I mentioned. Let's take a quick look at the industrials, which I haven't looked at for a while. Yeah, okay, so also good. Right now, I like the way that it does this nice little soft pullback and then a big momentum run, soft pullback, big momentum run. And let's get rid of that arrow right there. And I'm not quite sure what it's doing here, but it does look like it's doing the same thing. Yeah, it is. It's doing the same thing that XLP and XLE are doing, and that is forming a nice tight little base in advance of the next run. So industrials are good. Energy is good. Let's take a quick look at the banks, which have not been good. They've been really bad. Okay, nice little dead cat bounce, 3 bars up into the underside of the 200 period moving average. That's maybe about all that you're going to get on this current run, but it does look to me like, banks are going to bottom out sooner or later. It looks to me like there's maybe a little bit of a inverted head and shoulders bottom forming there. But if that's true, then it's going to get a little bit higher and then come back down, and maybe around 51, maybe around 52. 52 would be a good place to get on board XLF or FAS or one of the big banks, JP Morgan, Bank of America, Wells Fargo, and so on. Okay. Well, that's really that's about it for the good-looking sectors. So the utilities, I'm sorry, forgot the utilities, also in breakout mode, strong momentum. This I don't think, however, is a good place to go right now because it looks to me like it's starting to, and I say that because there was a lot of distribution down here low. We got on board XLU, and I bought some UTSL, the leveraged fund for this, down here in the right shoulder of this inverted head and shoulders, which was so nicely formed, especially at a time when the rest of the market was looking very messy. This was forming a nice clean pattern. And then it was just a couple of days later, we got the big breakout move. It was bang, 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 hit our targets. We got out, came back to test the upside of that set of highs and another leg higher. But I think that's probably about it for this run. So XLU is not a target of ours right now, but you might want to drill down. Now, I think it's important to go beyond just American stocks. So we've been in the EWZ, which is the emerging market fund, and this looks to me, right banging up against the range highs, looks to me like it's ready to go again. We took our profits on calls on that play not too long ago. EEM is the another emerging. No, I'm sorry, I got it wrong. EWZ is Brazil. That's the Brazilian fund, and EEM is the one we had calls on. And yeah, this looks also good. I'm pretty sure it hit our target and we took full price. Correct me if I'm wrong, but otherwise it is doing a nice looking little cup and handle. Breakout, probably going to come back in a little bit. So it's not really a buy today, but give it a few days. And I do like that Brazil chart as well. Is there anything else down here? There's a European fund that I have my ETF trend letter members in, and it just keeps slowly crunching higher, not doing a whole lot of stuff. I was in this Vietnam fund for a while down here off of that nice little hammer candle at around under 18, and I got out here above 19 a couple of days ago. Not recommending that either, but yeah. So now let's take a quick look at the homies. Yeah, they're pulling back after a breakout move, pulling back to the top of that line. They're probably going to get ready to go again here in just a bit. I do think the airlines have a good move. This is a nice looking pullback off of the 50 period moving average with a breakout move today. Yeah, we're going to look at this again. So I'm going to put this on my greens list. I kind of like the look of that one. And it's fresh, right? That's what you want. You want something that's just now breaking out, not broke out 5 days ago. Yeah, the solar sector got hit on FSLR miss on earnings, I guess. And so it's a no-go zone. And the regional banks. I do think the regional banks, we may be long. Probably not today, but maybe tomorrow. KRE calls in the options room or DPST shares in the live trading room, because I think, I could be wrong, but I do think that if the Fed is pivoting away, they did a hawkish pivot at the FOMC minutes a week ago, and that was not so good. But we're now getting some rumblings that people are looking at not 2 cuts in 26, but 4 cuts in 26. And we're seeing the odds of that going higher as we speak. And I'm not exactly sure but I guess the whole tariff thing is a concern. Jobs are fine, although the new jobs, not so good, but the jobless claims are fine. Maybe people are worried about AI. Maybe people are worried about a CapEx implosion in the mags. I don't know. But if we do get a more dovish Fed, we get a backpedaling from Powell because he wasn't into any more cuts before his term is up, then you're going to see regional banks do really well. And I think even on that hope, they're going to do well from here. And they're in a nice uptrend. They printed this ABC pullback. That was a big red bar day. That was the 15% tariff day. And then nice bounce back up. I would prefer to see this on the upside of that line. So that's why I don't think we're going to be in it today. It could come right back down here and fall off about 1.5, 2 points before it's ready to bounce out of that wedge. But we'll see. All right, so those are spaces I like. Let's go quickly to my greens list, and we'll sort these worst to best. So we've got at the top here some blue chip tech names, what I just said earlier. You kind of want to avoid blue chip tech, but there are 2 exceptions to that. One is if you have a really good technical setup, then yeah, all bets are off. But number 2, or you get an upgrade, or you get something that changes in the macro picture. AMD is a case example of that. WDC and STX are in the memory storage space. That has been a really hot sector. There are inflows there that aren't going into the chips or some of the other, the cloud names, the computing names, and the processors, the fabless names. You're not seeing inflows there. You're seeing them in the memory storage, one space, and the other space is fiber optics. That means LITE. We were just in VIAV, which gave us a really nice short-term gain. I was in some LITX, which is the 2X version of Light, and it just shot up like crazy. That was an Alpha Gold Alert trade. And so WDC and STX are 2 of the better names in that space. And of course, Micron is in there. That's the best of breed. You've got SanDisk, you've got AMAT, but this is the one that's printing a pretty decent looking consolidation pattern. Doesn't look like it's going to break down, but this pattern, I know from experience that this particular pattern, I guess I am seeing a little bit more in the bearish volume balance here, but this is the one that can really break to the downside very quickly. But if you can keep a tight stop, like underneath today's low or the low of Tuesday, then it's not such a low risk trade. Not one I'm interested in. This one looks a little bit better, right? You came down, you tested the support line of this high tight base, which is in and of itself bullish, and it succeeded in holding, and now it's bouncing back up a little bit. So you could get long STX. I think that's a valid setup right there. AMD is an interesting one. It was up on big news, and it was good news, some kind of collaboration. I don't know what. And then it had some bad news out of NVIDIA, and it went right back down. And of course, NVIDIA itself is pulling down the whole sector. Now, the thing I like is that there is this very strong shelf of support, very strong, after a big earnings gap up that's still open. That's the power gap. That's not an earnings gap. That was a government contract or something. And it keeps holding every time it comes down. Now, the concern is that it keeps coming down, right? So it gets all the way up here to 260, and the market doesn't like it at that level, and it gets slammed down to 200. Now, that's a pretty big move. And if you bought up there at 260, you're in big trouble. But if you're down here at 200 and you're thinking, oh, maybe it's going to hold again, I just have to say that every time it's been down to this 200 level, a little bit below, it has bounced pretty quickly out of it, bounced quickly out of it, bounced quickly out of it, and this time it has not bounced so quickly out of it. Keeps coming down, right? Lower highs, not as much upside. So a little bit concerned there. I'm not in it. I just want to see where it goes. I do have this is a aluminum play. I have it in my trend trade letter, and you can see the breakout on big volume yesterday and holding that level today. And Amazon, I'm going to take it off my list because I put it on there to see if it would break up through that resistance line right there. Don't think it will. ABBV is a good value growth play in the healthcare space, and there were some people in my pro trading group that are buying some calls out on ABBV, so I put it on my list. It's not really the kind of setup that I like. It's more of a trading range, right? And there is your range, and it's kind of near the top of the range, and it's not looking like it's going to head up on top of that anytime real soon, but I just put it on there. I am in WWD, which is from my one of my strong stock scanners in Market Surge, and it's just a beautiful looking chart, great growth, strong valuations, well-managed company. And yeah, to me, this looks like a really good place to be long. And I can't even tell you what it does. I know some people in my rooms are familiar with this stock, but I don't know. GFI is a good looking gold mining position. So I'm not sure I would be buying gold itself, but the miners look good, and we're in a couple of miners in the call in the options room. Here's your XOM is your best of breed, the best of breed energy play, but I like PSX better, not only because it has a little deeper pullback, taking more risk out of it, but the valuations are the best in the space, and it's the only one of the major oil miners that actually has earnings and sales growth. All the rest have been contracting, so keep this one on your list. Here's a little regional bank that looks good, bouncing off the 50. Here's the software space that I'm just kind of keeping this on my greens list to see if this little pattern, which could be a bottom, but I doubt it, is going to do something significant. Anyway, just keeping an eye on it. TPR is one we're long in the live trading room, and it's been a beauty as well. There's your little bull flag after a good momentum run off earnings, and today is breakout day. Here's your way to short Bitcoin, and it is printing a bullish inside day bar. And yeah, we got in a circle in the live trading room early yesterday on an alpha gold alert, which I don't usually do. I don't usually just take them because of the alert, but this is a stock that I knew has a potential recovery going on with in terms of sentiment, analyst reports, and contracts with government and some of the hyperscalers. And like some good things are happening in the company. The market just hasn't seen it yet. And then it came out with earnings and it just blew it out of the park. So when all of that coincided with the Alpha Gold alert, we jumped on it, and just has been going up and up ever since. Okay, we did buy some CRM in the live trading room this morning, and it was early, and got it on a dip. It was red when we bought it, and now it's green again. That looks good. And here's your best way to short Ether. If you're interested in that, I would keep a stop just below the 200. And IONQ got a AlphaGold alert about an hour ago, a couple hours ago, and this looks good, but I don't like the chart setup here, but I'm just putting it on my greens list to kind of monitor it to see if that AlphaGold alert was onto something, because sometimes they are. And when you see a stock like this that kind of shows up at random, usually you'll see gold alerts on Tesla and Apple and Microsoft, and there was one on Tesla and something else today, the big mags. But when you see a little guy like this, especially after earnings, right? Earnings are already done, so there's no catalyst from that, and yet there is this very unusual call flow into the name with time and size. That's what an AlphaGold alert is. Very unusual flow. Then it's worth paying attention to. So we'll see where it goes. All right, guys, I am really done with what I wanted to say today, and I apologize for the brevity, but let me jump over to the room. And I do see a few ticker symbols, and we don't have to do very many of these, but let's just see. Let's go with BE. All right, interesting. So Bloom Energy is in the energy supply space to the data centers and quantum computers and the AI applications. And it's been sort of in and out of favor with the market. However, I really liked what it was doing up here. Not that you would want to buy any of this mess. This is mess. As much as I can avoid trading a messy chart, I try to. I want to see a nice clean move like this one, right? But when it gets messy, and then starts to produce some clean upside moves, and then breaks out of that messiness, which it did a few days ago, and then it gets an AlphaGold alert, which it did last week, we jump on board, and we did. We bought BEX, which is the leveraged version of Bloom Energy. We bought it on that big breakout stick. We routed up yesterday, and it was starting to get all the way up here, and it looked a little toppy, and there was some bearish divergence on the 2-hour chart, and I said, hey, let's get out, and I'm glad we did, because it's been all downhill from there. But that is still a valid breakout signal, and I do think that if it does come back, in fact, it did already, sorry. If it comes back to the top of this trading range right in there, see all those, maybe you can't see it real clearly, but if you can see, all of these bars have a top, a high, that land at the same spot, around 159.60 something, and then recoil back down, back. Oh, here's the first bar of a breakout of that. Well, then usually when it does the breakout and returns, it comes right back down to the top of that line and tests it, and that's where you would want to buy it again. Well, you had a chance to do that this morning. Maybe you did. 159.20 or so, and now it's, look where it is now. It's 7.5 points higher. All right, now, does that mean that it's going to keep going up from here? Not necessarily. And your best buy is down here at the top of the line. That may not be possible again. It may come back down and test it tomorrow or next week. But regardless, it's not really, in my mind, a fresh buy right here, but that's what you want to look for. And if you're looking for a breakout pattern that has the pullback in it, look for the pullback to come to a former level of resistance, now support. It's a hold. For me, it's a hold. I wouldn't be a buyer here, but I like the stock. It's a fun trading stock. And when everything converged the other day, we had a beautiful run out of it. And I don't know, it was like 26% or something in a short period of time because of the leveraged version of that fund we were in. All right, well, that's all I want to say about Bloom Energy. Let's see if that does get some traction. Let me see here. Snow. Don't ask me about Snow. So Snow had earnings last night. The earnings were very good. It popped up quite nicely overnight, and it's been downhill ever since. So when you see an earnings gap that fills in on the very first day, it usually not such a good thing. I have long-term shares of Snow, and I bought them a long time ago. So I don't know, maybe down in this area, and I probably added some more in here, and I'm kind of pretty much at break even on those shares. So, um, am I happy with a long-term hold that's at break even? No. Do I want to see Snow really succeed? Yes, of course. But I'm just not sure that's going to happen anytime real soon. But that said, let's see if there's some bullish divergence going on here. No, there's not. Okay. So we have a double bottom, and that is one of the bottoming patterns that you tend to see after a long pullback. However, I need to say it's not a very reliable pattern. A cup and handle at the bottom, a inverted head and shoulders at the bottom, a rectangle that breaks out to the upside. Those are much more reliable. Double bottom often morphs into something other, right? So it's, yeah. Anyway, it's not a buy. If you are already long, well, good luck. Just keep your stop at a reasonable place. But it's not even really a hold either. I'm sorry to say. Okay. Let's look at Coca-Cola. So that's in that staple space that I really like. And yeah, this is why I like it. Look at this volume balance down here. A bullish volume balance that indicates accumulation of shares, especially by funds, is marked by a lot of green bars and a lot of tall green bars, much taller than the red ones. The tall red bar, and my definition is that if the bar is higher than the previous day, it's a tall, right? And if it's lower than the previous day, it's not. But if you just look at the color, green versus red, and if you look at how many tall bars versus red versus green, you're going to see it's a very bullish volume balance under heavy accumulation. That means funds are plowing into this guy because, hey, they're not finding good upside value anywhere else. So that's why the staple sector, which is a safe haven in a bear market and typically very quiet and sluggish, and you'll be lucky if you get your 7 or 8% out of something like Coca-Cola in a year, is all of a sudden on fire because the big market investors are not finding good value at risk anywhere else. So Coca-Cola, is it a buy up here? Well, yeah, I think so. I think it's probably just going to keep going higher. You're going to have to sit through some, intraday drawdowns, and you're going to get whipped around a little bit on a short-term basis. But if you can handle that, I think you're going to see this just steadily climb up the blue zone of the LRC. And it's at 80 and change right now. I think a few months out before earnings, you're probably going to see it up here at 85. Woohoo! That's a 12% return in a couple of months. That's pretty good when you analyze that. And maybe you can't find a 12% return anywhere else that's safe, relatively safe. But yeah, no, this looks good. So it's certainly a hold, and it may even be a pretty decent buy right here. I think Pepsi has a little better chart. Yeah, well, maybe not. I mean, big upside on earnings, bam, 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 bam. And then the ABC pullback, and now it's struggling a little bit to get above that range right there. But that's not a bad setup either. Really not. I think if you drill down to the hourly chart, you're going to see that this is a head and shoulders continuation pattern. And that is very bullish. One of the most bullish patterns in the market right there. Okay, so Pepsi-Cola, Coca-Cola, let's look at XBI, the biotechs. Yeah, I think biotechs actually, healthcare in general will do well, XLV, and you can leverage that by going down into some of the biotech spaces. And for those, you probably want to focus on, the big drug makers like Lilly is always good, and Merck I think has been pretty good. Amgen, good. But as far as going to the leveraged, speculative, pipeline only sort of biotech plays, I'm not so sure I would go there until we see a better macro environment for that kind of a program. And we're not there yet. But just for these big guys, and XBI is a good source for those, then you've got a very bullish thing going on. You've got a nice uptrend. You've got a pullback into the trend line, the 50-period moving average, a nice runoff back down to test that line. See, that's where you could have bought it this morning right off the black line, and that would be a perfect entry. It's a little bit higher than that now, but yeah, this is good. This is bullish. It's a bullish a fund, and I do think that it's probably going to have a pretty decent run. Of course, all bets are off if it does close below the 50 and below that STL, which probably should be put right there. If it closes below that line, then you'd want to get out. Okay, let's do these real quickly. TSN is a I was getting it confused with TSM, the Taiwanese semiconductor company, but this is a chicken. This is a chicken farm company, right? Tyson's Food, and another safe place to be with good, strong uptrend. This is actually a great chart. In fact, I like this so much, I'm going to put it on my list. And yeah, look at this. So big momentum moves. You want to see these big momentum moves to the upside and then soft pull back to the downside on preferably lower volume, which is also true here in this case. We had a big 3-day reversal, right? A green up, red down, green up. And then, yeah, no, it looks like it's banging on this little resistance line right here, your trend, your pullback line. Oh yeah, no, that's a really good setup. Technically, that's one of my favorite kind of setups. Strong uptrend all the way to the top of the LRC, A, B, C pullback, and then another move just about ready to form. Yeah, that's perfect. That doesn't really get much better in a market like this, which is range bound, not trending. ONDS. I know the ticker symbol. I'm struggling to remember what this does, but that doesn't really matter. Let's just look at the technicals. Okay, so again, strong momentum uptrend up to the top of the LRC. It's not really an ABC pullback. In fact, this pullback is pretty sharp. Don't really like to see that very much, but it has recovered from there. Here's your higher low. Here's your breakout high, and then another higher low. Yeah, this is actually looking pretty good. Now, it does look like it's, it's going to struggle to get above the 50. It needs to get above the STL. You've got earnings coming up. I wouldn't be a holder over earnings, but maybe between now and then, on some positive hope for a good catalyst, you're going to see this get back up. And the range highs are right about here, 1160. And, there's a good 10, 12% move right just in that, getting up there, maybe up to 12 for earnings time, and then all bets are off. But I do like this. Not quite enough to put it on my greens list, but I think that's a decent setup. And if you're already long, you'd want to put your stop underneath that pivot low right there. All right, let me just do one more. GD. So General Dynamics, of course, in the defense space, and that's been a hot sector. Every time you get saber rattling between U.S. and Iran, you're going to see stocks like this do pretty well. I prefer, in this space, I prefer Raytheon, which has a much nicer chart, stronger uptrend, nice clean pullback to the rising 50, a little bit of a sharp pullback there. I don't like to see that, but it has reversed today with an inside day bar off the 50 and a higher intraday low. This is what I don't like, right? This big distribution down here signals maybe something's not quite right. Market is maybe thinking it's kind of done. They're taking the profits, but of course they could be wrong. So, but as far as the chart goes, and as far as the, Raytheon has not just defense branches, but other kinds of things going on. It's a good play. So another thing you could do is play Defend, which is the leveraged version of the ETF fund for the whole defense sector. You're going to get in here Raytheon, General Dynamics, LT, which is, what is it? I'm blanking on the name. LTR, LTX, anyway, one of those guys. And then Boeing is in there, and I think General Electric and some others that contribute to the defense industry. And this, to me, looks like a better setup, right? So you've got this up, rounded bottom pullback to the 50, back up to test the highs, and then a little bit of a nice little tight coil underneath those highs. This looks good. So I think if I wanted to play defense, I would just buy a smaller portion of Defend, which is leveraged, and then you've got the bases covered. All right, guys, I'm going to let you go. God bless everybody. I will produce the video, put a link in both rooms, and we'll trade the last power hour together. God bless. See you in a little bit. Bye for now.